Yo, what up everyone? In this video, I want to go over how to gain larger trading profits and how to make sure your losses are smaller than your profits. It's going to help us grow our account and it's also going to help us trade with confidence. Two very, very important things that I feel like a lot of beginner traders struggle with. I'm going to show you examples off of the chart, some actual trades that I took, how to manage them, what I did right, what I did wrong. And then I'm also going to get into some psychology tips backing the charts so you could understand it a little bit better. Before we get into it, I'm going to link my Instagram in the description below. I definitely recommend you all to follow this at Entretrade. I post daily trading recaps on here along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. Link in the description below. You're missing out if you're not following it. But now, let's get right into these examples. Probably one of the most important concepts to trading is having a stop loss. This is kind of like common sense. This is going to prevent us from blowing up our accounts, from taking larger losses than expected. And it's also going to help make sure that we could still take losing trades, yet still be profitable in our trading. So a stop loss is the point on the chart where your analysis will be proven wrong. They define the risk that we are willing to accept. To make money in any market, anything in life, you have to put risk on the table. So when something doesn't work out in our favor, we need to protect our risk, and we do so in trading with a stop loss. Now with stop losses, we need to have the discipline to cut the trade when we're wrong so we don't lose even more. I'm cool with losing 500 bucks versus not being cool with a $500 loser turning into a $5,000 loser. You need the discipline to exit when you are wrong. The best traders that I've shadowed on Wall Street and the best traders that I've known and physically talked to, they exit without hesitation. I've seen them take 5-figure, 6-figure losses and they don't even flinch. They accept the loss, they learn from it, and they use it to get ready for the next trade. They told me that sometimes, and even with experience, sometimes a losing trade will set us up for a winning trade. For example, this QQQ trade, hypothetically speaking, let's just say we played it short at the supply zone. We played QQQ puts, rejecting supply. Now we sold off about $2 from entry if we got short at supply, but let's just hypothetically speak and say we didn't take profits when we should have, maybe below VWAP. Now we're stuck in this trade, and what was once a $1,000 winner is slowly, we're losing profits and it's slowly not moving in our favor. And eventually we stop out when we break above high a day, which is the right thing to do to stop out, but the wrong thing to do to not follow our plan and exit when we should have. So now we're out of this trade. We took a $500 loss on this, let's just say. There's nothing stopping the market from rallying another $3-4, and this $500 loser now would be a $5,000 loser. Now, what I just said before about sometimes a losing trade sets us up for a winning trade, a lot of people put their head down after a loss. They shut the computer down, they get frustrated, but sometimes after we stop out, it's the best time to re-enter. Let's just say we broke above high a day, we failed to stay above high a day, and then another hour later, we break the high again, yet fail to stay above it again. Maybe we get another short signal right here. We play QQQ puts. And this example, we could have made another $2.50 on this drop. And this could have been a winning trade right here. And it would have outweighed, this right here would have been a winning trade. And it would have outweighed the loss that we took earlier when we stopped out up here. So you must obey your stop loss and you must get out when your analysis is wrong. However, be ready because sometimes you learn from your loss, you journal it, you accept it, and get ready for the next trade because it might work out just as good. And also, your risk to reward needs to be in your favor for the trade to make sense. If I'm risking $1 to make 50 cents, it just doesn't make sense. If I'm risking $1 to make, $3 or $5, I'm cool with it. I'm cool with losing 6 out of 10 times and only being right 4 times, yet I'll still make money and still be profitable because the risk to reward is in my favor. Now, this is where the video is going to get very interesting, and this is where I want you all to pay attention. We have something called stop profits, where we're limiting our maximum potential that we could possibly have in the market. A lot of traders find it difficult to exit their trades, not only when they're wrong, which is our stop loss, but also when they're right and letting their profits run on winning trades. It's very important to have an exit plan when you are right, as it is to have an exit plan when you are wrong. When you stop out of your trade early, you reduce your reward. Anything that skews your risk to reward to the negative side is going to stunt your growth with your trading account, and it's going to not let you lose as much as you should in order to be profitable. Our goal is to lose as much as possible, yet lose as little dollar amount as possible, if that makes sense. So over time, like I just said, it's going to prevent the growth. Winning trades have to be larger than losses. If you dissect your trading journal and you see you're consistently making $150, $200, $250, yet you're having losses that are $500 or $800 loss or $1,000 loss, and your highest winner is $500, then you're doing something wrong. Your winning trades and your reward must be much higher than your losing trades. It is very, very key. Now, a reason for this, why we can't take our profits when we should, and why we don't let our winners run, is 3 different reasons. The first one, and one of the most important, is we fail to identify a target price. This is our reward. This stems down to our emotions and entering the trade without a predetermined plan. Before any trade is put on, you must have a clear exit plan if the trade not only doesn't work out in your favor, but if it does work out in your favor, where are you going to exit and where are you going to take profits? So I'm going to show you some of my trades. So this was an example on Lucid. This was last week. We had a very, very clean rally. Go over here. Off the $48 demand zone. So not only did we put a inverse head and shoulders pattern in here, we also bounced off the $48 demand zone and broke above 50. So let's just say we got long on the break of this downtrend. Some nice buying pressure came in and we got long all the way up here. Let's just call it at the break of $48.50. So now we're long right here. Where would it make sense that our stop loss is? For this trade, depending on your risk tolerance, could either be below $47, the low a day, or below this low that it made at $47.50. So let's just act like it's $47.50. We're risking about $1 on this trade. So for it to make sense, for me to find my entry signal, I need to be making at least on the low side, 2-to-1 risk to reward. And I would want to see a 3-to-1 risk to reward, which means in this example, I would have to make at least $50.50 for my target to be from a risk to reward standpoint, not based off of where I'm going to be correct on the chart. So going back to this example, you must have a clear exit plan in place if the trade works out in your favor. So for this, my first target would be $50, and my second target would be pre-market highs, and then above that, I would just ride the trend. It is 10 times easier to stick with a trade when you have a plan set and a firm profit target in mind. Without a predetermined target, your emotions are going to get the best of you. You're going to be fearful, you're going to hesitate, and you're most likely going to be very greedy in holding trades much longer than you should. So now I'm long Lucid, my stop is in play, we move up a little bit and we move down, right? Let's just say we don't have a clear plan in play. This pullback right here is probably going to scare a lot of traders, and this is where they fall into the mistake that they stop out before their exit hits, or they maybe take profits when we start moving up, and they take profits before their target plan triggers. So let's just say we sold some at 50, we sold some more at the pre-market highs at 51.25. Now we met our 2-to-1, 2.5-to-1 risk to reward. Now at this point, instead of getting out maybe your full position, we still have a lot of room up where not only are we at all-time highs, we don't have supply, we don't have any resistance, and we have clear buyers showing interest in the market. So nice volume, and we are bouncing off of demand. You must ride the trend. The trend is your friend. If you exit where you should, maybe you exit 90% of your position or 75% of your position where your target is in play, yet there's strong context, buyers are factored in, sellers are factored in, and there's still an obvious trend. See how we're making higher highs here? See how we're making higher lows? The trend is your friend. Keep riding the trend, and if you ride the trend, you follow your plan. Maybe your plan is exit when the trend dissembles, when we start making lower lows or start making lower highs. That's maybe when you could sell once you're, out of some of your position. And if that was the case, a pullback like this all the way at the highs, about $6 away from my entry, isn't going to scare me. Whereas if I didn't have a plan, this pullback right here is going to scare me. Granted, I have an entry all the way down here. And if you did that, you probably could have held this trade all the way to the close where we could have sold near the highs. Another example of this is Amazon. This is a trade I took as well. So Amazon, we were watching this above the $3,580 to $3,600 mark. We wanted it to get above with strong volume. You can see some nice buying pressure coming through down here. We got above our green line, broke above the trend line, and there's nothing stopping us from tagging supply. This is our plan. We get in above 3590, 3600. Maybe our stop loss is 3585. So we're risking about $5. Call it $10 on the high side. And our target is 3633, which is a supply zone. Where risk to reward is in our favor. This trade makes sense. Maybe we sell some at our supply target. Pullback doesn't scare us. This pullback right here, we're in down here. This pullback does not scare us either because we still have our target in mind, we have our stop loss in mind, and we have a stress-free trade. When trading becomes stress-free, that's when you make the most money. You could have rode it all the way up to the top supply zone and had a clean $80 rally to the upside. You all know what happens when Amazon rallies $80, especially closer to the end of the week. Serious options go up. I will say you're never going to sell at the top. And the way I look at it is, it's much easier to build a house with plans than it is to build a house by eyeballing it, right? So when you have a plan, trading becomes stress-free. You trade without emotions. You don't have fear. You don't hesitate. You're not greedy. This could also backfire on us. Let's just say we're greedy, right? Let's just say we don't take profit at supply. Let's just say we keep holding it. What's stopping this market from pulling back? We had this ego that, I'm not selling it at supply. This could have dropped. And we could have took a huge loss because we were greedy and wanted to squeeze more juice out of the lemon. You always have to follow a plan. It keeps you on your toes. The next one is lack of confidence. I see this all the time. A lot of traders trade without an edge. I'll ask people that message me on Instagram, they take a loss and they want to figure out what they did wrong. And I always ask them, was this trade based off of your edge? If they said no, then it's a trade that you should not have actually put on in the first place. And if they said yes, then it's a trade that the market didn't agree with their analysis. A lot of traders trade without this confidence. You don't have confidence because you don't have an edge. You have to figure out what works for you. Your edge is your own system that gives you an advantage of the market acting in your favor. For me, it's supply and demand and price imbalances. I love taking the market long above a key level, targeting supply. Or I love playing calls, off of demand. Risk is very tight and my reward is very high. Playing supply and demand, my risk very, very small and my reward is very, very high. Same thing for key level breaks. So you have to figure out what your edge is. The way I look at it is this. How do you expect to extract profits out of the market if you don't have confidence? It's like playing in an NFL game, but never playing football in your life. You can't step and be a professional if you've never touched a football in your life. Or it's like going on a first date without any confidence. If you don't have any confidence, you're not showing like you're the man, most likely the girl's not going to like you and she's, not going to go on a second date with you. Dating advice with Carmine Rosato now. And this is a quote, Brett Steinberger, amazing man right here. He said, confidence is not just a function of how you think, but it's also how you act. Confidence affects how we act. If you act in a way to trust your judgment, you're going to have the opportunity to see your judgment work out. If you have the confidence in your trading plan, you have the confidence in your edge, and you trust yourself and you trust your judgment, you are going to see the market is going to work out in your favor more often than not. And that's just going to keep building the confidence. And when you build your confidence, that's when your trading profits and your account is going to grow. And that's when you make your losses so much smaller than your winners. The stop profit scenario, unfortunately, is the stop confidence one as well. If you act with confidence, even in a small measure, you coach yourself to self-trust and a deeper internalization of that confidence. If you take your profits too early or you don't stop out of your trade when you should, that is a stop confidence issue. When you act with confidence, you have trust in yourself, and that's when trading changes. Okay, now the last one is past mistakes. I would say 90% of traders, or at least beginner traders, go through this. They have past mistakes. A lot of traders have been hurt in the past. They take a large loss. They blow up their accounts. They had a $2,000 account that they saved, 4 months for, and they blew it up, and now they don't have anything left. Or they have a consistent, $400 or $500 winners, yet they took a $10,000 loser. It just doesn't make sense. Those mistakes scar us. They damage us. It's like having a paper cut, right? If we treat the paper cut, we put some, cream on it, hydrate it, treat it, put some peroxide on it, it's going to heal up today. But if we go outside and go play in the dirt, we're just going to hurt that cut even more. We might get infected. And, now we don't have a finger and arm. And now we can't hit the buy or sell button on the keyboard. But you can't let your past mistakes or your past scars, your past cuts affect your future decisions or affect your present decisions. A lot of traders are scared. They're hurt. They don't want to take another loss. And they see some green profits. They take them fast. Let's just say I was in this lucid trade still, right? I'm in at 48.50. I see it come to 50. I take some profits. Perfect. Followed my plan perfectly, right? Now I'm still in 50% of my position. I take some more at 51.50 when we break above pre-market highs. Now I'm in 25% of my trade. This is actually what happened. I'm going over my trade here. Now I'm in this trade risk-free, and we keep moving up. We keep moving up. And, I sell 30 minutes before end of the day. That's the right way to do it. But now let's just say I'm entering the market. Yesterday I lost 10 grand on a $30,000 account. I'm long at 48.50. I'm taking profits, right here at 49.60. As soon as I start seeing some green and I see my profit and loss flicker, oh, I'm up $500. Let me take it. I want to protect myself. That's the wrong mindset. You have to follow your plan. I can't stress how important that is. You must accept the uncertainty in the market and get comfortable being uncomfortable. There is no growth with comfort. You must be comfortable being uncomfortable, and that's when you start growing. No one knows what's going to happen next in the market. You're never going to sell at the high. You're never going to buy at the low. I don't know if my analysis is going to be correct. I don't know if this is going to be a red trade. I don't know if this is going to be a green trade. The market decisions are out of our favor. The only thing that we can control is our emotions. So to do this and control our emotions, we have to start getting comfortable being uncomfortable. That is very, very key. A lot of traders, like I just showed you, exit their full position, keyword full, prematurely to lock in gains when they have them, failing to obey their take profit point just to have a sense of security so there's no more risk being exposed in the market. When you have a big position on, it might not work out in your favor or it might work out in your favor. But with no risk, there's not going to be any reward. You always have to have risk being exposed in order to make money on anything. For example, going back actually to this Tesla trade, let's just say we longed off demand. We're here, right? We see some green. Maybe our take profit point is at like 11.20. Let's just call it in this case. So we take it long here, yet we see we're up a quick $10 and we take profit. I'm not going to say that's the wrong thing to do, because if you follow your plan and this is where your take profit was, then yes, it makes sense. But if this is not where your take profit was and you exit here just because you see you're up $1,000, that's the wrong thing to do. Yes, we pulled back. Yes, we're having our risk exposed, but we're maintaining our stop loss. This thing eventually broke out and you could have had a nice runner on your trade if you weren't focused on the money. So detach yourself from the money. Don't just take green because you have green. Follow your plan and exit at a point where it makes sense in the market. Do not exit the trade to achieve this sense of certainty that I don't have my money at risk anymore. Instead, exit when it makes sense to maximize your returns by following your plan. That is how you get larger profits and smaller losses. You have to accept this is a big emotional game, control your emotions, understand very key important concepts, and a lot changes in your trading. I also follow a very strict take profit strategy. I have it in the course, and that really helps me maximize a crap ton of my gains by following that strategy. So All right, I think I'm going to leave you all off on that note. If you enjoyed this video, drop a like, subscribe to the channel, comment if you have any questions, and be sure to check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord and no extra cost. I will be adding a full tape reading section to it very, very soon to the A to Z course. But besides that, peace out.